Cipher Mining stock surged on Thursday, closing up nearly 10%, gaining $1.21 to finish at $13.81 per share. This was one of the strongest single-day moves since the Google stake announcement. Investors are asking what drove this rebound and what it might signal for the days ahead. Last week brought dramatic price action. The stock soared to year-to-date highs above $15 on excitement over Google's involvement, only to tumble 17% on Thursday and another 1.5% Friday. Even after Monday's bounce and Tuesday's consolidation, the stock had lost nearly 8% for the week. The announcement of a 10-year, $3 billion high-performance computing hosting agreement with Fluidstack backed by Google was arguably the biggest deal in Cipher's history, yet the share price fell sharply. That dynamic, a powerful headline followed by a sell-off, reflected profit-taking, confusion about the deal structure, and caution over dilution and execution risk. Thursday's rally took place without a new press release or fresh regulatory filing. No sudden change occurred in the fundamentals. The underlying narrative, however, remains powerful. Cipher is evolving from a pure Bitcoin miner into a hybrid infrastructure player at the crossroads of crypto and artificial intelligence. The Google and Fluidstack deal is the clearest sign of that transition. It is a 10-year contract to host high-performance computing at Cipher's Black Pearl facility in Texas. Google is backstopping $1.4 billion of Fluidstack's lease obligations and receiving warrants to purchase roughly 5.4% of Cipher's equity. This is a marquee technology company effectively betting on Cipher's execution. That story did not disappear because the stock sold off last week. In fact, the pullback may have made it more attractive. After an overshoot to the upside and a violent correction, the stock became technically oversold. Traders looking for a dip to buy got their chance. When they stepped in, the powerful underlying narrative gave them a reason to hold rather than just trade. That was one ingredient in Thursday's rally. Another factor was technical and sentiment dynamics. After weeks of volatility, short interest in Cipher has been rising. JP Morgan recently flagged Cipher as one of 3 names with the ingredients for a potential short squeeze, citing high retail flows and significant short interest. When a sharp rebound collides with a crowded short, forced buying can occur as shorts cover to manage risk. Momentum traders also tend to chase strength, and that accelerates moves. We saw a similar pattern on Monday, a 10% snapback after last week's sell-off. Tuesday brought a small 0.5% dip as profit-takers cashed in. By Thursday, the stage was set for another push higher as selling pressure waned and buyers re-engaged. The stock's ability to hold above $12 created a technical base. Once it broke out above 13 with volume, the path to 1381 was open. This is classic price action in a high beta growth story. A third factor was a subtle shift in how investors are thinking about the warrant and convertible note structure. Last week many were disappointed to learn that Google's stake came via warrants rather than an immediate equity injection. Warrants mean future dilution when exercised. The $1.1 billion in zero-coupon convertible notes also means future share issuance. For investors who hoped for a clean, cash upfront deal, that was a letdown. But as the dust settles, a different picture emerges. Google's upside is tied to Cipher's success. It only benefits if the stock price rises. That is exactly the kind of partner a company wants when building something ambitious. The convertibles provide the capital to execute. Dilution will happen, but alongside growth in revenue and profitability. As that understanding spreads, fear recedes and the stock can move on. The fundamentals continue to provide a floor. Cipher's August operational update showed 241 Bitcoin mined, 42 sold, and 1,414 Bitcoin held in treasury. Hash rate and efficiency at Black Pearl are exceeding prior guidance. Even before the AI hosting pivot, Cipher was executing well on its core mining business. That gives investors confidence that management can handle the new challenge. Macro conditions are also supportive. Bitcoin remains stable near $115,000. That bolsters miners' profitability. The Federal Reserve's rate cuts reduce financing costs for capital-intensive companies like Cipher. Lower rates also support risk assets broadly, which helps high-beta names rebound from sell-offs. Combined, oversold technicals, a still powerful narrative, potential short covering, solid fundamentals, and a supportive macro backdrop, you have the recipe for Thursday's 9.6% rally. One strong day does not erase last week's volatility. The stock is still below its recent highs. Dilution and execution risk remain real. The AI hosting build-out is ambitious. Power and latency constraints, customer onboarding, and cost control will all be challenges. But for investors who believe in the long-term thesis, this may be the kind of pullback and base building period that sets up the next leg higher. The bullish scenario is that the stock consolidates in the $12 to $14 zone, digests dilution fears, and then begins to move higher as more details of the Google deal are disclosed and initial AI hosting milestones are reported. As it proves execution and perhaps signs additional hyperscale customers, the market begins to value Cipher more like an infrastructure company than a miner, awarding it a higher multiple. In that case, last week's pullback is just a hiccup on the way to much higher levels. The bearish scenario is that execution stumbles. The AI hosting build-out is delayed or runs over budget. Bitcoin turns down sharply. Dilution weighs more than expected. In that case, the stock could revisit lower support levels or languish in a range. Even here, the Google partnership provides some downside protection, not in the stock price but in the credibility and long-term opportunity it represents. Another way to frame it is through time horizon. For traders, CIFR is going to be volatile. The swings can be used but require tight risk management. For investors, the key is whether Cipher can execute on this hybrid model and whether one is comfortable with dilution and the bumpy road to get there. Google's involvement does not guarantee smooth sailing but dramatically increases the odds that Cipher becomes more than just another miner. Technically, the levels to watch are support around $12 and resistance near $14 to $15. A sustained move above 14 would suggest the market is regaining confidence. A break below 12 would signal that sellers remain in control. Volume will also be important. Strong up days on high volume are bullish. Weak bounces on light volume are less convincing. Thursday's rally is a reminder that narratives this powerful do not die overnight. The Google partnership remains a transformative catalyst. The warrant structure is complex but ultimately aligns incentives. The fundamentals are intact. The macro backdrop is supportive. Volatility is the price investors pay for high potential returns. For those who can stomach the swings, Cipher Mining remains one of the most interesting hybrid plays in the market. Cipher Mining has just had a textbook rebound. The stock soared on anticipation, crashed on the headline, and now is bouncing as investors reconsider the long-term story. Google's stake is not a gimmick. It is a strategic partnership that could reshape the company's future. There are dilution and execution risks, but those are the risks that come with growth. If Cipher delivers, last week's drop will look like a blip on the chart. Thursday's rally is a sign that the market may be starting to look past the sell-off and back at the bigger picture.